It's time to answer those difficult questions that everyone has to face in life. Hi everyone and welcome to Shah Lusso, and yes, today is another Q&A episode. As always, if you want to ask questions to be featured in these Q&A episodes, make sure you leave those in the comments below on this episode or in any other video for that matter. But let's get right into it with the questions. First off the bat, we have one from the Dubai expat. Shout out to Nico, follower of the channel and who comments a lot on these Q&A episodes, so appreciate that. His question is, brands are raising the prices every year and in some cases 3 times. Is this sustainable? If they continue at the current speed, a Rolex Submariner will be $20,000 in a few years, while the product basically stays the same. This is a very good question because yes, brands in general across the board are increasing their prices. There's always a bit of a move towards trying to be a bit more luxury, especially as watches become less and less useful, for lack of a better way. They need to move sort of far away from the smartwatch as much as they can, so they don't have to compete with it, because obviously they can on the technical front. At the end of the day, what you're priced at is as much a marketing exercise as it is, protecting your balance sheet. So yes, prices are continually going up, but it does vary from brand to brand. You use the Submariner as an example. I think that with watches like the Submariner, the AP Royal Oak, all those hype models that are selling for 2-3 times list, they have a very unique position because they can actually see what the market is willing to pay in an upwards direction. Every other brand needs to worry about managing depreciation, worrying how it'll impact their brand if they're selling for X and their resale price is X minus 20, 30, 40%. If they keep raising their retail price, but the pre-owned price stays the same, then it ends up looking bad, because what was a 20% depreciation before the price increase could then look like a 25% depreciation. Marketing wise, it doesn't look good at the end of the day. So it is something that on the one hand, it's necessary. On the other hand, it can bite them in the ass if it's done wrong. But let's take the example of a company like Rolex, since you provided that in your example. So Rolex in general, on average, raises their prices 5% every year. Now it's an average across different models. Some get raised higher, some get raised lower, but let's call it 5% to make life easy. Now, one thing we need to consider is inflation. 10 years ago, $1 wouldn't be the same as $1 today. So we have to factor that in. Now, I did some research, and do bear with me as I look at these notes because I'm not a numbers person. So on average, since the year 2010, the inflation rate has been 1.79% per year. So every year that Rolex was increasing their prices by 5%, you have to consider that 1.79% of that was just adjusting for inflation, assuming they're pegging it to the US dollar. So a 3.3% increase doesn't sound like that much. At the end of the day, it's, they're sort of moving with the times and gently moving themselves up. But for reference, to give you an idea of how long it would take, for example, for a Submariner to hit 20,000 US, looking at their current pricing, which is 9,150 at retail, for them to hit the bottom end of what the pre-owned price for a 126610 LN is, which is around 13,000 US, that'll take them about 8 years. It'll take them about 15 years to hit $20,000. So when you put it in that perspective, at least in terms of brands like Rolex, you don't really need to worry about them increasing their retail price, because considering how hard it is to get them, A, their retail price becomes less and less relevant, and B, there's still plenty of margin before it even catches up to the pre-owned price. Now, 2 things to consider. Will they keep going until they hit the pre-owned price? I don't think so. I think they will always want a little bit of margin to account for when hype dies down. Nothing lasts forever. And it'll look much better for them if prices plummet down to retail, which is what matters to their bottom line, versus if they keep getting closer and closer to the pre-owned price, and then the pre-owned price goes below what the retail price is at that time. So marketing wise, it's not a good move to match the current pre-owned prices because they're too inflated. But also, not even considering pre-owned prices, if they inflate a Submariner, for example, up to 20,000, and assuming all other watches don't change, that puts them in the same territory as a retail Royal Oak or Aquanaut. Now, obviously, those are hard watches to get at retail as well, but the problem is they don't want to be cross-shopped. If you look at where Rolex sits in its positioning it's in a pretty comfortable position from a retail perspective. It has strong appreciation, so people don't worry too much about losing money, but more importantly, it doesn't really compete out of its league. It has competitors that, from a technical perspective, come close to it, but it's not really competing on a Patek level or an Audemars Piguet level. It's not in that segment, and I don't think they plan to be, because simply their business model of being a mass manufacturer, trying to standardize as much as possible, being as business focused as possible as opposed to art focused as something like a Patek might be, it doesn't suit their business model, so I don't think they'll ever actually try and hit that stratosphere. And then you need to consider the effect on other models. One of the reasons why I said they average 5% increases is because some models don't get increased that much, others get increased more. And the reason is that other models can't necessarily keep up with the rising tide. Things like the Air King, things like the Sky Dweller in some cases, certain two-tone models, the entire Cellini range. Not every Rolex sells to huge demand, so they do need to measure out how much they raise the price on their hype pieces. Otherwise, they might find themselves, for example, with a steel Submariner that costs more than a gold Cellini. And in the Rolex world, that doesn't make any sense, especially because this isn't a groundbreaking new model like it was when they introduced the Royal Oak into an Audemars Piguet collection in the 1970s, which was only precious metal, and the Royal Oak was more expensive or about on par with them. That's not the scenario. So they have to be wary also of not cannibalizing their own sales by raising the prices too much and devaluing their other products. So sorry if that got very sort of tech and finance geeky, but at the end of the day, I do think the pace that they're going is sustainable and that they will measure out and they won't always increase at such crazy amounts. And most importantly, while the craze is around and it's hard to get these at retail, really what happens on a retail level is irrelevant because the market seems to be inflating the price way more all on its own. So I hope that gives some perspective and answers sort of the direction you're going. With other brands, yes, they do increase their prices, but also a lot of them tend to increase the value along with them. Things like in-house movements, new materials, because they have to compete on much more of a merit basis versus some of the hype pieces that have already done the hard work decades ago and are riding high on a huge wave of brand recognition, as well as their own actual technical merits as well. Next, we have Boy Mcfacto. Question for Q&A. What do you think the Calibre 400 means for Oris? I think it means a lot. Oris over recent years has been trying to push itself up market. We saw that last year with the Pro Pilot X, which was sort of a halo model, costing around, I think, 6,000 or 7,000 US, but it was full titanium skeletonized and of course, in-house movement with an insane power reserve. This Calibre 400 seems like an evolution of that, but something that's a little bit more to the mass market. At the end of the day, Oris knows it can only sell so many $6,000 or $7,000 watches right now. So the idea is they had the halo to bring the attention. Now this is sort of the more accessible version. I guess if you had to do a car analogy and imagine that Oris is like Mercedes, the Pro Pilot X would have been their SL65, whereas now this is like an E500. So it's the one that still packs a lot of punch, that's still very good, but it's not quite the AMGs because they know they can sell more of those 500s. If you're into cars, that will make sense. If not, then I'm sorry, poor analogy. So I think what it means is that Oris is now clearly committed to moving up market. They're not just making halo products with in-house movements and with crazy movements. They're committed to pushing it into their actual bread and butter lines with things like the Aquas. Also, what it does is it makes it much more competitive against a brand like Tudor, for example, which has Rolex backing. Because Tudor essentially dominates this sub $5,000 category by bang for buck value from a technical perspective as much as aesthetic and appeal. So by creating this in-house caliber that very conspicuously eclipses a lot of Tudor's stats, it shows that, they're trying to go after that market and to compete on a technical level, as well as making a very good looking watch in the case of the Aquas 400. And another thing that this is going to do is it's also going to put pressure on other players within this sub $5,000 category to use in-house movements to beef up their technology. Because at the end of the day, I think what's going to happen is things using the ETA 2824, 2892, it's going to push those into the sub $2,000 category or even further below that by simply allowing this sub $5,000 category to have much more technical prowess, attract more watch geeks. And that will also sort of strangle a lot of those other smaller micro brands competing with smartwatches, competing with brands like Seiko and Orient, which offer a lot of bang for buck for much less. So it does have a little bit of a shake-up effect in the industry. But one big thing is whether Oris can manage the teething problems that this caliber has had. If you're familiar with the channel engineer wannabe, who I'm actually going to be speaking with hopefully in a few weeks, he actually had the experience and he documented it really well across 3 videos in which there's a little issue, a technical issue in which the minute hand jumps a little bit when you're setting the watch. He also had a few issues with the power reserve, but that can be down to use, but the jumping minute hand I think is a bigger concern. So the way that they manage this is going to be key to whether this is a success or not. Now it's important to bear in mind, of course, that new calibers are always going to have teething problems, and at the end of the day, we as consumers are always the stress test. Think about things like the Tudor GMT, for example. Right out of the gate, that had a few issues with the date function. Speaking to Mr. B, he actually told me that the GMT in the Rolex, in the 6-digit reference, also had a similar issue when that first came out. But of course, with the Rolex, that was so long ago, no one remembers. With the Tudor, that now seems to have faded out and they seem to be selling fine. So a lot is going to depend on whether Oris can manage the existing customers in terms of giving them good service so they can do right by them, and also whether Oris can rectify the feedback and make sure it doesn't happen on future models and how fast they're able to do it. It's a big challenge for them, especially because they're not the ones who are actually manufacturing the movement, they just designed it. So they also need to isolate and see whether it's a case of the manufacturer that's making the issue, whether it's their design that has the issue. This is something that needs to be fixed and most likely will be, but how they handle that fix will be key to this caliber's success. Next, we have a question from SoCal Watch Reviews. Big shout out to Miguel. Make sure you check out his podcast every week that he puts up. They talk about all sorts of things related to watches. They have a lot of great guests. So shout out to SoCal Watch Reviews. And he asks, what is next for the Shah Lusso brand, straps, blogs, etc.? Very good question. And honestly, like most people, 2020 was not quite what I expected it to be. For reference, I've spent the last 7 to 8 months stuck in my house. I have not been to a single watch store since my trip to Dubai. So where I live in India, the coronavirus is very much rampant. They had a very strong lockdown at the beginning. Now things are open up, but the cases keep rising. And on top of that, the medical system is already extremely stressed. So I haven't really been able to go out with any particular confidence that it's safe to go out. Luckily, work-wise, I'm able to manage that. The work that I do has been remote for quite a few years now, so I'm okay on that front. But also the downside is that I haven't been able to really do what I wanted to do with the channel in terms of filming new content. I was lucky that I had the trip in February where I went to Dubai and filmed a ton of watches, but I haven't been able to film any new content since. So that's kind of delayed all of my future plans for the channel by about a year. In terms of stuff like straps and blogs, well, I do actually have a Shah Lusso website that I've somewhat neglected. So probably I might work on that a little bit more, figure out a way for that to be sort of a more useful and appealing resource. In terms of straps, that's something I'll probably wait on for a while, purely because my main focus is going to be getting the channel to where I want it to be in terms of the quality and consistency of content. If I look at my first year, that was trying out, had no sort of idea of what to do, just throw anything at the wall and see if it sticks. Year 2 was going to be, all right, refine the process, you know what you're doing now, and do exactly what you want to do. But instead, it's been more a case of I had the content that I was able to film and then sort of make it up as I go on how to film content without getting my hands on very many watches. For me, looking forward, my main focus is going to be on getting the channel to where I want it to be. There's a few ideas that I have in terms of segments I want to do. So yeah, most of the future is going to be still focused very much on the channel. Things like straps will probably come later. And when I get into that, I will have sort of the same level of, attention to detail in it. If I was going to do a Shah Lusso strap, for example, it would have to be, really, really good quality. I would actually be doing proper designs. Like it wouldn't be like, pick it out of a catalog and throw my logo on it. So yeah, main focus for the future is just going to be really refining the video content, getting it to a level where it's consistent. That's also going to mean more collaborations as well. That's something I've started now and something I'd like to continue in the future. But yeah, definitely still just refining the process and just focusing entirely on making the channel the best it can be so all of you guys can enjoy what I put up every week. And then last question we have from Alexander Meladze. I hope I pronounced that right. If not, I'm sorry. And let me know in the comments how to pronounce it. A great follower of the channel as well, who I always have interesting conversations with in the comments because he has actually a pretty cool collection, which he's going to outline in this question. Shah Lusso, quick question from your avid fan. I watch your videos all the time and actually love your channel. Thank you. However, I don't think I've ever heard you discuss anything about Graham watches. A couple of watches recently caught my eye, both in the Chronofighter line, vintage and nose art models. Similar to you, I don't sell my watches. So investment idea is relevant to me. I just wonder if they are worth the $3,000 to $4,000 price tag they command. What do you think about them overall if you would rather spend this money on something else? Just to give you an idea, my collection, I already own 3 Zeniths, a Defy 21, Type 20 GMT, and ultra thin, 3 Ulysse Nardins, marine chronograph, Quadrato, and a 40mm diver, and the JLC home time, plus some less relevant pieces. I kind of do not want to add more Zeniths or UNs. I recently looked at Anonimos as well. Again, not sure about the worthiness of the money they want for the models I like the Militare Vintage, they want 4K. Thank you. So I actually already answered this in the comments for you, Alexander, but I did say I wanted to elaborate on it a bit more and also to share this with people on the Q&A because I think it's an important question. There's a lot of these brands like Graham, like Anonimo, like things like Zinn, things like Bremont. A lot of these, I don't want to call them tier 2 brands because I don't think that's fair to them. I think they're brands in their own right, but you know, they're not your typical Omega, Rolex, Breitling, the big boys, let's say. So for lack of a better way to put it, these tier 2 brands, a lot of them use ETA movements. A lot of them have very distinctive designs. They're not leaning just on centuries of heritage, essentially. They had to differentiate themselves somehow. And a lot of the times that's through design, not so much through the movements. And that's not a bad thing because as I mentioned in my video about outsourced movements, there's a lot of advantages to an outsourced movement. However, I do think that there is a cutoff for what's acceptable that has an outsourced movement. And for me, usually that cutoff is about $5,000. The reason being, once you start getting above that, you start getting watches with in-house movements that then start surpassing on a technical level, as well as still having some pretty cool designs. And then heritage starts coming in. There's a lot more factors to compete with that I think make it harder for these brands to play in that upper echelon. And then when we talk about brands like Graham, one big thing they have is they are very distinctive designs. You know, they have sort of this steampunk aesthetic, or they have these really cool sort of hyper-skeletonized models in the Silverstone range, which even have like, you know, tire treads on the strap. I think they're very cool designs, but because they are so stylized and so unique, it means there's a limited market for them, and that brings the price down. Now, as you mentioned, much like me, we don't really care about resale value in terms of looking forward. We care about resale value as in, is it worth me paying this, or can I get it for a better price? So what I would say is that with these, it's important to think from the seller's perspective, even though you don't plan on selling it. Because if you look at something like this, chances are the seller of this watch will be holding on to this for a long time because it's a distinctive design. It's not for everyone. The longer they hold on to it, that means the longer that they sort of get that itch that they really want to get rid of it. And that's whether they're a private seller or whether they're a business. Now, on top of that, if they're a business especially, it means also they would have gotten it at quite a discount to make sure they could have a margin that justifies the long wait to sell it. And what that means is you have room to negotiate because you now have a watch that has a long wait time and a big margin for that seller. So that means you have wiggle room to bring down that price while they can still make money. And they have incentive to get rid of it because they've probably had it for a while. They probably don't have a lot of inquiries for it, so they will feel that added pressure to actually move the watch. And bringing that back to buying, that just means that you know you have a lot more negotiating power. So if you're seeing these going for $3,000 to $4,000, for example, start negotiating more towards that $3,000. Bring that price down as low as you can so you can get the best bang for your buck. As watches, by having these workhorse movements in them, that gives you a degree of confidence in their quality. You know they'll be easier to service, they'll be decently well made. You won't have very many technical faults, which is a great comfort to have. And looking at your collection, you know, you have a lot of distinctive watches. So something like a Graham, for example, even in that company, I mean, companies like Ulysse Nardin, like with the marine chronograph, those all look quite different in general. The Defy 21 as well, pretty insane looking watch. So it's tough competition to get something that looks different in that. So I think something like a Graham would be a great addition to your collection because it follows with the notion of being different, not being the tried and true classics, but it'll stand out within your existing collection. Same thing with the Anonymous. With those, you get the benefit of, you get a lot of the charm of a Panerai and also a little bit of the history in the sense that Anonymous was actually founded by a couple of ex-Panerai guys. But obviously you're not paying for the brand in that sense. You know, you're paying for a lot of the same quality, a lot of the same vibe, but still looking a little bit different. You know, they're not Panerai homages. I look at them more as if Panerai was simply made in like an alternate universe. It's a different take on Panerai, but still with a lot of that DNA. And when you consider that a lot of the early Panerais, it's only somewhat recent in the last few years that they've been using in-house movements, so this would represent good value versus say a pre-owned Panerai that packs, you know, a 7750 or an ETA or an Unitas. So yeah, I'd say definitely go for those, but just bear in mind that negotiating power that you have. If you're going for watches that will be sitting on a dealer's shelf for a long time, that probably were purchased at a high margin, you have a lot more negotiating power, so you can bring that price down. My advice would be look on Chrono24, look on the price range, and knowing that these are watches that aren't in the highest demand, know that that lower end of the range is where you can try to pull the price. So not that many questions, but I do tend to ramble a lot. I hope I answered all your questions in enough detail to leave you guys satisfied. And of course, if you have more questions, make sure you leave them in the comments below. And of course, if you like this video, make sure you like it and share it. And of course, if you want to see more pictures of the infographics featured throughout this video, make sure you follow me on Instagram at Shah Lusso. And if you want to keep seeing new watch videos, make sure you subscribe to the channel and hit that notification bell as well so you know when the next video comes out. And last but not least, thanks for watching this video, and we'll catch you on the next one.